It is time for the weekly rant where me and Will will talk about the latest news, price action, and whatever the hell else we want to talk about. Here joining me is Will. How are you?
Hey Simon, I'm really surprised that WorldCoin told us their end game so early into it. Just in the last rant we're talking about, we said that it's possible that they might expose this orb scanning technology to governments and businesses, and that we might end up being the product. Well, lo and behold, not a couple of days ago, the manager in Europe actually came out and said, hey, so this is what we're going to do. We're going to give out these orbs to governments and other interested parties. And he had the gal to say that WorldCoin would actually not be able to provide universal basic income to everybody. So it's almost like the whole premise has been canceled. It's not so much about UBI, it's about distributing these orbs around the world and just incentivizing everybody to scan their eyes so that they can become the product to anybody who's willing to pay the company behind WorldCoin. How about that, Simon?
It's fairly disingenuous, isn't it? And it just gives fuel to the fire of the crypto people who are saying that this is not a good solution. And so obviously we were very strong, or I was very strong, especially on my opinion that it was a terrible, terrible investment in general. And
Mm,
I was cautiously pro about the concept because I do think we do need decentralized identity. So that
mm.
element of it, I felt strongly about that we do need that solution, and I was hoping this could help us get towards that solution. But yeah, there seems just to be some stupid things going on now. I don't know where it's going to go from here. I mean, I just heard that Kenya has kicked WorldCoin out of there, so they've stopped people allowing to scan their iris. And I know that WorldCoin was definitely trying to use, I guess, some of the more third world countries to get the
Mm,
numbers up because they're obviously here. The idea was here, here's $50 just by going and looking in this orb thing. So that was
mm,
how they're going to get the numbers and maybe the network effect, because if they could sit there and say, hey, look, we've got 100 million people who are already signed up for it,
yeah,
that then might
yeah,
flow into other spaces and people go, oh, this is a real thing. But in places like Kenya are
yeah.
kicking them out, then who knows where else it can go.
Well,
So we could be watching a
yeah.
really big train wreck going on here, or maybe
Hmm.
they still will find a niche in the market. I'm not sure.
I try to stay as neutral as possible when I'm looking at these crypto projects. And to be honest with you, I felt fairly neutral and I did think, well, who knows how this could go. I downloaded the app and I actually got my airdrop. I was excited about it. And I wanted to see where this could go. I was just surprised at how suddenly it just went, yeah, UBI, that thing we said about UBI. No, we're not about that at all. And so it's it's mind blowing. I mean, I do understand it from their point of view that they want to create some sort of business and they've seen an opportunity, but I just don't want to scan my iris. And the rate of the bait and switch is the thing that scares me the most. Let's say they say that they started with zero knowledge proofs to for your iris and everything. There's nothing today that says to me that that iris thing doesn't have my entire biometrics, and there's nothing to say that, let's say, Kenya decided to keep WorldCoin and the orb. There's nothing to say that the government would go, hey, yeah, I know it used to be zero knowledge proofs, but why don't we link the birth certificates and the social security cards and the banking and everything else that Will or anybody else is using to their eyeball? That scares me. And so I was ambivalent about WorldCoin, but I'm not a fan. I'm campaigning against them from now on.
Yeah, absolutely, and it probably needs an element of skepticism, I would say. But speaking of, I guess, digital ID, just to give a promo to people, is that I am speaking to a founder of Verida just this afternoon after this talk, actually, which is
Mm,
another form of digital ID. They've got a very different approach to it, so I think it'll be a really good talk to have that comparison between what WorldCoin's doing and what Verida is doing, and the viewers and us can decide which one we prefer. So if you're interested in that, look out for that one coming up. The next one, this is probably the biggest news that came out in this week, and obviously it sent a lot of shivers through the space, which was Curve. There was a hack on Curve and obviously some Contagion. So for those who don't know what Curve is, Curve Finance is one of the biggest decentralized exchanges out there. But unlike Uniswap, which is swapping any token. Curve predominantly does like for like. So you're trading your USDC for USDT or DAI, or you're trading Ethereum for STETH. So it pretty much does one-to-one exchanges, and obviously creates a lot of fees in between. It is a huge, huge protocol. It's one of the biggest. It's been around for a very long time. So it's got a huge amount of trust in it, which is quite interesting. They've managed to find a hack now, which makes me a little bit worried. And I'll talk about that maybe after Will has a go here. But Curve Finance is kind of the backbone of many other DeFi projects. Many other DeFi projects connect into Curve to gain that one-to-one
Mm.
liquidity. So, Will, what are your thoughts on this? What happened?
Uh, Curve got hacked. There was an exploit, and I think it had something to do with an update. I think it's good that they found the exploit, and I personally hope that Curve can survive out of this. But then the hack wasn't the big deal. The problem was that even though the smart contracts themselves are fairly strong, and the hack did happen, it was $48 million, and hopefully those people can be maintained, can be compensated. The problem is that uh, people withdrew their curve and they also started to sell it. That makes a lot of sense. That's what you do when a hack happens, and that started to drop the price. That's fine as well. The real problem was that where curve is vulnerable is that the founder had $100 million worth of curve as collateral in Aave and a whole bunch of other protocols. And so this guy has brought $100 million. He's put in a lot of curve as collateral. I think more than 40% of the entire supply, and he is at risk of being liquidated. If that does happen, that is a self-reinforcing thing that causes the price to keep liquidating and falling and falling and falling, bringing down the price of curve, and anybody who holds it. That's scary. I personally wouldn't want to be holding curve right now.
Yeah, so you're right. It is the founder of Curve. He owns like 48% of the supply of Curve, which in and of itself is kind
Mm,
of ridiculous in some way, shape, or form.
mm,
But
mm,
he put all of that, not just some of it, all of that onto the DeFi lending platforms. So it was spread about a bunch of them. Aave, Compound, Frax, a whole bunch of them. And it was like something like $200 million worth of Curve tokens, and he borrowed about
mm,
60, $70 million. So, you know, if that was a smaller person doing, you know, $2,000 and borrowing $600, then that would be perfectly fine. The DeFi markets can manage that. But if you have someone
mm,
who has 48% of the Curve tokens as collateral, and now we have a hack, which is causing people to be fearful of Curve. People are selling Curve. The liquidity pools are getting drained because people are unsure whether their Curve is safe in there. So there's less liquidity in the market. There's less ability to buy or sell, in this case, all those Curve tokens. So the price starts coming down. If that price hits the liquidation level that this 48% of Curve that's used as collateral is set at, you can't sell that much Curve on the market.
mm,
The DeFi
mm,
protocols would hit their automation, which is sell collateral, that would go into the market. The price would tank, causing it a cascade effect. And Curve could effectively go to zero for a period of time there as the automation of the DeFi application starts trying to sell, 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 and the price just goes down because there's no buyers. That is what's at risk here. So literally, Curve could go to zero for a period of time as the DeFi applications liquidate this position.
I I like what you said in that you said for a period of time, in that there's some sort of chain reaction happening and there's a mechanism that's feeding its back on itself. But then Curve has been around for a while and it has been useful. And it's a learning opportunity. Other protocols need to look at this. And the thing is, this isn't even something exactly wrong with the protocol. The point of centralization was Michael, the owner, and him deciding to put all of his tokens somewhere. This should really be a study, and like hopefully the market can learn and avoid this in the future. And it being a smart contract, it could probably be upgraded and strengthened in some way. So I do hope that we learn something out of this, and I do hope Curve survives because I do like Curve. And if it hits zero, you can bet that I'm going to go down there and buy those tokens because it's a good protocol and it's proven itself.
It's definitely a high risk play, but yeah, if Curve really drastically drops in price, there will be people that will come in to buy, and it's kind of, I guess, a question of who's where you're trying to catch the falling dagger kind of thing. At what point are you comfortable with it? Because it depends on how much of that position gets liquidated. So eventually buyers would start stepping in and start buying the curve that's trying to be sold. And that's where the price would stabilize. Where that is, nobody knows. So it's a real
We don't
risk.
know.
The
Yeah.
question is here is, what happened, and is it right? Is it wrong? And I guess the thing is, DeFi is doing what it's supposed to be doing. It's trying to protect the people who have put collateral on there to lend out. So I think if this much liquidation occurred, I think Aave, for instance, probably will lose some money for its depositors, but Aave does have a protection fund as well for a scenario like this. So I guess DeFi is working as it's supposed to. It's doing what it's supposed to do. It's trusting the code, but maybe there does need to be some more, fail safes in place. Like maybe you don't allow that much of the token to be used as collateral. You don't need 48% of that token being allowed as collateral. But how do you do that? Because there's multiple different platforms out there. So it's a really hard one for builders to build for. But that's, I guess, the risk that's taken. So when Aave decides to put another token on there that can be used as collateral, they have to make that, I guess, kind of assessment of what's at risk here. What's the chances of this one losing value? What's the chance of this one being liquidated? How much liquidity is there to sell into this? And I think that's something, I guess, that these protocols could have a think about, especially when they're introducing new tokens as collateral. The other question is, why did he do this? Why did the guy put all this money into there? I guess obviously he's curved, so he's very DeFi literate. But I think there's two main reasons he might do this. Is one, if he just tried to sell his curve token, he owns so much he's going to move the
Yes.
price in and of itself. And crypto Twitter tends to turn very quickly on founders who start selling their tokens. Even though,
Mhm.
these people want to realize some profits, but crypto Twitter, obviously, it's, open source code. People can see the founders when they start selling tokens. And it's like, hey,
Mm.
where's your conviction gone? Oh, this can tank the entire price anyway. So people don't like seeing them do that. So he's got that element to it. He just can't sell that much. And maybe he wants to go buy things in the real world and he needs to sell some of those tokens. But he's aware of what that means for the protocol, for the project, for other token holders, and maybe he doesn't want to be part of that. The other one is tax reasons. If you go and put it onto these lending platforms and borrow against it, technically you haven't caused a capital gains event. And that's going to be depending on jurisdiction, because I know technically he's changed that curve token into a AE curve token on Aave. Technically, that is a capital gains event by many jurisdictions. So it's a very grey area there. But definitely when you are just borrowing against it, that is not a capital gains event. So that could have been part of
Mm.
it. And so he wanted to go get, I think he's borrowed mainly USDT. And so maybe he's taken that back into
Yeah.
the real world and gone and bought things. I know he owns like a $40 million mansion in Melbourne. So maybe that was funded by this loan. We don't really know where
Yeah.
the money's gone to that he's loaned out, but that could be the reason why he's done it. But he's
Mm.
obviously probably sweating a lot right now with this liquidation. And hopefully by the time
Yeah.
we're recording this liquidation may occur by the time this actually comes out. Hopefully it hasn't. This won't
Yeah.
time well, won't age well if he's been liquidated by the time we actually get this edit done.
Yeah. And it's a reminder that humans will be humans. I love humans, but then if the incentive is there, people will take advantage of it. Somebody has the opportunity to spend $100 million. They're going to think to themselves, well, how can I spend this in the least risky way? Yeah, he could have sold it, but you're right. Taking out a loan works tax wise and community wise. He obviously didn't intend for this to happen, but it happened. And we're heading to a smart contract world where hopefully over time, even these things won't be as big of a problem.
I think the lesson here is if you are going to use leverage, double think, triple think, and think about the implications that it can cause. How do you get out of that position if prices tank? Because do you want to be liquidated? Those are big questions that you got to think about when you're using leverage. And you or I obviously won't cause the market to go into despair if you or I get liquidated. But obviously, someone like this possibly should know better, but maybe not.
Mhm.
All right, moving on to our next topic, which is Richard Hart and the HEX token. So, for those people who don't know, Richard Hart is a very controversial, I should say, figure in the space. So, he is the founder of HEX token, which I haven't fully dived into, but there's just so many red
Mm.
flags about it that it's always made me steer well clear. But I know some very smart people who had a fair bit of confidence or conviction in Hex. But Hex is basically it's an ERC20 token that does do inflation and it gives it to the holders. So it was basically buy Hex and hold it forever, and you'll have more Hex in the future, and you'll be a millionaire. Is what Richard Hart is kind of famous for saying. He was very loud and prominent. He very much so flashed the money that he had. Well, now the SEC in the US is coming after him for fraud. They're saying he's been taking people's money and going and buying luxury items, luxury goods.
What
I
could go
guess
wrong?
what could go wrong? So I said I don't know everything about Hex, but I do know that it being an ERC20 token and just issuing out new tokens gives it a Ponzi effect. Bitcoin started out as a
Mm.
Ponzi. So Bitcoin definitely was a Ponzi because it had no value because, unless other people perceived it to have value and more people came in. But the biggest difference is that Bitcoin had underneath it its proof of work. So Bitcoin had
Yeah.
an element of value to it because you had to use some element of computing power, electricity, which gave it a floor price. Hex doesn't have
Mm.
any of that. And so Bitcoin's value is still there because more people came involved and it's kind of broken free of the Ponzi scheme element of it. So maybe Hex was trying to do that, but with no underlying value to it other than the next person thinking it's more valuable. That to me was a massive red flag. Add to that on his actual website, it's got in his frequently asked questions, is it a scam? If someone has to be asked, is it a scam? It's probably a scam. Better than Bitcoin was also used, words I've seen used by Richard Hart. So all those things made it really bad for me. And obviously now the SEC is going after him. So I guess maybe we'll find out in the long run whether he is doing something not right. What are your thoughts, Will?
Well, yeah, I don't know as much about Hex. We're talking about having a bullshit detector, and sometimes when a token passes by, I go, I don't even want to look at that. It's just another token out there. I usually am not in support of the SEC because they do seem to have a kind of like they don't really snipe at everybody. They kind of go after a lot of people, and sometimes they do get the good people. And the problem is that they're not when they're going after a good person, they actually end up wasting their time, their money, their reputation, and things like that. But then when the SEC does go after people who are out there creating things that are legitimately scams, then I think that's good. I think people do need to be scared of the SEC. I just want to see real clear rules that say do this, we'll come after you, do that, and you're fine. But I mean, if anybody from Hex is here, maybe they can enlighten us. Maybe Hex is not a scam. Maybe it's a great token. And in that case, I wish Hart all the best. But otherwise, let's see how it goes for him.
You're right there because we do often say quite negative things about this. Yeah, you're right in that we do often say negative things about the SEC because we've been very negative about some of the elements of it. So I guess we do need to be, thinking on the other foot. And so maybe Richard does have a case to defend himself here, and maybe he is actually doing something legitimately good.
Hmm.
So let him have his day in court, I guess. It's the same thing with it. Binance and Coinbase are going through. Let them have their day in court and let that try and figure out who is right and who is wrong, per se. There's a second part of the story, which is, I guess, interesting and conflicting in my mind, is that Hex is predominantly done on Uniswap. Trading of Hex is done on Uniswap. And this is controversial, I feel, because obviously Uniswap is supposed to be a decentralized exchange. Nobody can stop anybody
Hmm.
from trading between whatever they want. But
Hmm.
Uniswap on the front end, so on the website of things, which is what retail use, they shut that down. So they are not allowing people using their front end website to trade Hex. What are your thoughts on that one, Will?
I don't know. Like, yeah, that's a controversial one. Whether I like Hex or not, I really believe in decentralization and somehow giving power back to the people. If Uniswap can shut down Hex, well, let's pretend that they did it for the right reasons. Okay, that's fantastic. But then what would happen in the future if the government could come and coerce whoever has the ability to turn that switch on and off? That puts Uniswap in a dangerous position in that if I'm in some jurisdictions, I might not be able to buy Bitcoin because some bureaucrat somewhere thinks I shouldn't for whatever reasons. Maybe I want to own some Bitcoin. And I happen to have libertarian, I suppose I lean a little bit libertarian. And I want to own Bitcoin if I want. And, God damn it, if I want to get some Hex, I want to get some Hex. And I want to see Uniswap being free enough to allow anybody to trade anything that they want. But the question is how this lock happened. Was it a DAO vote? I guess that's different. And if it was a DAO vote and that triggered a smart contract to switch off Hex, I can get that. But if it was somebody who went to the website and uploaded it with FTP, I don't know how decentralized Uniswap is.
Well, Uniswap is very decentralized, so it is all on chain. So you can still trade
Mm,
in and out of Hex if you know how to interact with the smart contracts. I don't know how to
mm,
do that. If Uniswap website goes down, I don't know how to go and interact with the smart chains. I mean, obviously anybody could then build another front end. So I'm sure if you wanted to, there are places where you can still do this trade. But it's the fact that the website itself is not allowing it. So someone has made the decision at the front end to say, no, you can't do this unless you obviously know enough about smart contracts to be able to do it, because Uniswap is all on chain.
yeah.
They can't stop this from trading, but they can
Mm,
make it more difficult. And so that difficulty level that they've added for someone even as experienced as me is actually too much. I can't get around that. I don't know how to interact with smart contracts without the Uniswap front end. So I think this is wrong in so many ways. I don't think they should be playing the arbiter of this, because why do they get to choose what can and cannot be seen
mm,
on their front end? I think it's bad for the space. There's been so many other scams, there's been so many other wrong things, and they've never done this block. As far as I'm aware, maybe they have. This is just a really
mm,
high
mm.
profile one. I don't think Uniswap should be
Maybe
deciding that.
maybe perhaps to their defense, I mean, I completely agree with you. I only want to trade in places where I know everybody's free. But maybe they have been coerced in some way or they're afraid. I'm sure the Uniswap founders are known and they have their lawyers and things like that. Maybe their lawyers told them, you'd better take this down or something could happen to you. We all know what happened to Tornado Cash developers. And so perhaps what we really need is we've got the unstoppable smart contracts. Maybe we also need to start talking about unstoppable front ends where somebody comes up with a protocol and they put a unstoppable front end. You could put a gun to their head and tell them, I want you to stop this right now. And you can say, I can't. I'm sorry, but I can't. And maybe that's what we need. Yeah.
Maybe that's the future there for sure, to not allow anybody to just pick and choose what people can and cannot buy. So it's an interesting one.
Mhm.
I'll be watching this one with some interest, because I said I know some people who I consider to be very smart, who are very passionate and have high conviction in Hex. I don't have that
Mhm.
conviction, so I'll be very interested to see how this goes. Let's move on to the last thing. Talk about price action, Will. What are your thoughts on what's been happening the last week?
Ooh. Well, last week, last couple of months, it's starting to look more like a downtrend than a sideways market. But also looking at some of my indicators, we're generally bearish up until, I guess, towards the end of September. Then it gets a little bit more bullish, uh, more towards the end of the year. But so far, it does look like we're in a bit of a downtrend. For me, that just signals personally more buying. I have the conviction that we're entering the bull, start of the bull, and so I actually like this downtrend, and I personally will just keep accumulating my tokens. How about you, Simon?
Yeah, I agree. We do seem to be in a bit of a downtrend since the big push up after the XRP ruling. So news does move the
Mm,
markets a little bit right now because there's no retail coming in. So the people in the space are getting pushed around by news. I guess the thing that I'm noticing is that Bitcoin and ETH are only down about 1-2% on the week, whereas all the other kind of alts, even the high market cap ones like Solana and stuff, are down 10% on the week. So we're
oh
still
my
seeing
god.
this constant bleed from alts And where is it going? Well, I think it's predominantly going into Bitcoin and Ethereum. So people are still moving to those safe havens. People are still following the thought process that Bitcoin and Ethereum are going to go up first. So they're going to lead the market. So I want to capture that first. So I think because it's still the same people in the space, there's no new money coming in. We're all just cycling it around. We are slowly seeing that cycling going into Bitcoin and Ethereum more. So yeah, we're in that range. We've always talked about this. It's going to be a flat year. It's been flat months. We're in a small range, but Bitcoin and Ethereum don't bleed as much as alts. That's where we're at.
I've got to say something, Simon. I have been tempted to look into the strategy of rebalancing my portfolio quite literally every week, and I haven't really looked too deeply into it. But what you just said triggered something in me. In that Bitcoin and Ethereum, the rate that they go up and down is different from other tokens. In this case, at the peak where the tokens are going a little bit high, if I had done a bit of rebalancing then, turned some of my alts into Ethereum and Bitcoin, I might have come out a little bit on top. And then once the alts go down and then Bitcoin and Ethereum are too much, buy back those alts and keep that keep my percentages of my portfolio equal. I don't know. It's a tempting strategy, but it's also just like a lot of work.
It does sound like a lot of work. It does sound like a lot of risk, and it's definitely not my strategy. So I very much so think I'm just an investor, a long-term investor. I'm going to buy it and hold it for the next bull market. But if people are inclined, yeah, you've got a good point. It is an interesting way to look at it.
In that I'm never moving a lot. So let's say I'm 90% Ethereum and 10% alts. If the alts hit 15%, I'd offload a few alts and get a little bit more Ethereum just to get the balance, you know. So the movement wouldn't be huge, but it would just be a lot of price work. I don't know. Something to think about.
Something to think about. There's lots of strategies people could employ, but I think that brings us to the end of the weekly rant. If you have made it this far, please give us some comments, give us some likes, give us some subscribes. Help us get this message out there, because we love doing this and we want more people to hopefully learn and get educated in this space. Will, thanks for your time, mate.
Thank you, Simon. Until next time. I almost left the studio again.